Gentleman yields back. The gentleman from North Carolina, Mr. Nichols, recognized for 5 minutes.
Thank you, Chairman Hill, for holding this hearing. Thanks to our witnesses. Decentralized finance, or DeFi, has transformative potential. It can make our financial system more accessible, transparent, efficient, and innovative. DeFi can create a more inclusive financial system, as traditional finance just might not be for everyone. Of course, as with any new technology, there are risks. I hope we can learn more about how to mitigate those risks during today's hearing. It's important that DeFi remains a bipartisan issue. I'd urge my colleagues to find common ground in supporting both innovation and consumer protection in DeFi. Bipartisan work is absolutely crucial to creating a balanced and durable legislation that will protect consumers and keep digital innovation in the United States. And really, I just don't think it's an either or. I think we can do all of these things. We can protect consumers, we can encourage digital innovation, we can embrace this amazing new transformative technology that can improve the lives for so many Americans. We got to keep those jobs here in the United States. Ms. Rettig, first question for you. Can you talk about some of the risks with DeFi and how legislators on this committee should be thinking about how to address them?
Thanks very much for your question, Congressman, and for your leadership in this emerging space. I'll hit on the illicit finance side of the risks because I know that is the greatest concern, and I think a place, to your point, where bipartisan and industry can all agree that we want that to stop. Not a penny should go to bad actors. And I proposed a framework along with my co-authors in a paper that came out in January that looked at how to combat illicit finance in DeFi with a three-part framework. The first was to expand on the definition of independent control found in the 2019 FinCEN guidance to be able to actually identify intermediaries that exist who may actually have regulatory obligations. So it will close the gap that the DeFi Treasury illicit finance risk assessment put forward in DeFi. The second part is what I alluded to in my testimony, which is to treat pure technology protocols as critical infrastructure, just like we do with electronic clearing systems and financial messaging systems. And the third part is to create a new category of entities that will have additional risk mitigation obligations in the financial integrity space to be able to meet the goals under the BSA of document detection and deterrence of bad actors.
Thanks so much. Second question to you again. How are other jurisdictions approaching the regulation of DeFi? And is the U.S. falling behind countries like China?
Thank you very much for your question. And unfortunately, we are falling far behind. And setting China aside, we're falling behind the rest of the world. Just from a anecdotal perspective, regulators across the world have actually been engaging with industry for, I would say, the last 5 or 6 years to talk about what to do in a collaborative way. The EU in particular, the UK as well, and numerous countries in Asia, Japan, Singapore, and the like. Every single country to date has, even if they've implemented centralized crypto regulation, they have said we either need to study or explore or do further analysis of DeFi. And I will say the one notable proposal is from France's prudential regulators, which seek to think about regulating DeFi much like cyber infrastructure and imposing certain types of cybersecurity standards and audits of these DeFi protocols. So it is very different everywhere across the world than how we are handling it in the US, other than in some of the proposed legislation we've seen, all of which suggests studying DeFi, which is the right way forward.
Thanks so much. You know, we did a bipartisan CODEL. We travel around the world to meet with these other markets. They're open for business. They are trying to take jobs here from the U.S. And it certainly dawned on me the importance of making sure we continue to keep up with the rest of the world, because this is a place where we continue to fall behind unless we act here in Congress, and we have the ability to do that. So I'm eternally optimistic that we can get it done. Mr. Avello, next question to you. We constantly hear that both innovators and capital are leaving the U.S. due to a lack of regulatory clarity. What human capital and financing trends are you seeing in the U.S., seeing as the U.S. falls behind in Web3 and DeFi?
I can say from wearing my investor hat and from a personal perspective, I've seen a number of incredibly qualified teams, the exact types of people I think that you were mentioning that you'd want to see here, building hundreds of millions or multi-billion-dollar companies and protocols. Unfortunately, having to move abroad necessarily to set up operations, their companies, and basically offshoring most of their activity. And I can tell you from working with or seeing pitches from teams like this, that there is an incredible interest about staying here in the United States and running, potentially launching and operating their protocols in a compliant fashion. But I think the regulatory unknowns are just too challenging on a personal level, and unfortunately they've had to move abroad in order to effectuate their businesses.
Thanks so much. I'm out of time. I yield back.